Hello everyone, happy Wednesday. I don't know where you are, it's raining here, but we're still happy and we're still positive. Welcome to this week's edition, #askrobco. Thank you for joining. Regular guest James with us today. In the background, we've got Dan and Kevin is back this week. Format of the show following, you've got the questions tab on the right-hand side. You type in the question and we give you the answer. So please type away and give us the questions. If you're not listening live and you're watching on YouTube, then email your question or save it for next week's show. Hope everyone's good. Hope everyone's healthy. Hope everyone is enjoying August, whether on holiday, in quarantine, or working away. Okay, let's go straight into the updated sales data. So you've got your handouts on the right-hand side. I want to go straight into that. So handout 5, I think it's called, which is the fourth one down, is your 21-week post-lockdown sales intel that we do with LUNRES. So let's go straight into that because that's the hardcore information. Each week, as you know, we talk about each week, as you know, we talk about pricing, listings, sales, transactions, intel, data, product, LTVs, risk, sanction, credit, everything related to residential, commercial, property market and lending, banking and finance. So these headline data, if you open up the handout, we go to the highlighted area, 10th of August, that's the week, the latest figure that's been released, and we'll go straight into the instruction numbers, 660, very high number, very consistent with the last 6 weeks, lots of properties flooding the market. And the next column is the price reductions, 279, pretty consistent with previous weeks. Third column is the under offers, that's really important because we want to see that the properties that have come onto the market are going under offer and then going to sales. 368, slightly down on previous weeks, but still a healthy number. And the sales figures, 157, again, slightly down on previous weeks, but still a very healthy number. That means for the last, say, 6-7 weeks now, we're consistently having a lot of properties coming on stream, a lot of properties going under offer, and a lot of properties being sold. Also, if we look at the 2, 3, 5, 10 million figures on the right-hand side, they're performing extremely well. So we're seeing a lot of transactions in the 2 million plus, 3 million plus as well. And then it tapers off slightly to very consistent numbers, 5, 10 million. I want to go into more detail with these numbers. So if you look at the bottom handout, which is trends, where is that? Dan, help me on this.
Oh yes, 6 transactions.
Transactions.
Handout 6 transactions.
Great. Handout 6 is transactions. If you can open that, very good document. So that's 6 transactions. Maybe I can share the screen if you can't open it. So basically this data is really nice and straightforward data here.
You should just hand out 6 transactions in your instructions number over.
Great. So if you look at the 3 lines we've got new sales instructions, under offers and exchanges. The trends are really positive in the sense that the year was very, very strong. So as you can see, we were 20-40% up on all 3 areas on the previous year. And then, as you can see, the COVID-19 lockdown kicked in and everything crashed. And now we're seeing May, June, and July recoveries. Now, what I like is that the orange line, the new sales instructions, have reached pre-COVID-19 lockdown numbers. But when you compare it to last year, you're probably somewhere in the region of 40% up on new properties reaching the market than July 2019. That's a tremendous amount of volume. And when you look at the brown line, which is the under offers, very, very consistent with pre-lockdown, and just a tiny bit under, or more or less the same where we would be year on year like for like, so back where we were previously. And the last column that we're waiting to catch up, and arguably the most important column, is the transactions number. And across the board, we're probably about 40% down where we were a year ago. But in prime central London, which is moving quite quicker, in July, we were only 14% down on the year before. Now, that's an interesting one. Why? Because July and August have seasonal adjustments. And with the seasonal adjustments, you always see a dip. Whereas this year, we're not seeing the seasonal adjustments as much as we would last year. So actually, we're much closer to normal volumes. And it'll be interesting to see how the August figures play out. So on the whole, very good numbers. And just so that you're aware, there are 9% more properties on the market now than there were this time last year. So that's also a very good key indication of what we're seeing on the ground with all these new instructions coming in. James, what do you got on that? And everyone else, please keep your questions coming in.
So in terms of property market news, statistics out the past week, we've got more rental stock due to hit the market with sort of dwindling tourist numbers here in London, with landlords looking to switch to offer more longer term lets. We're going to talk about shortly what impact that may have on the market, but also some positive news in the market. Home repossessions have fallen 93%, largely owing to sort of COVID mortgage safety net. And those statistics, comparison of Q2 2020, early this year, against Q2 2019. And what I want to ask you here, Rob, is that a case of sort of what goes up must come down, or can we treat this as some sort of positive news in the property market?
Yeah, I mean, I would say, unfortunately, I think those numbers are definitely shielded by the umbrella and window that's been brought in. And I do very much expect that if that closes out and it's not extended, I know there's a lot of political pressure on it being extended, but if it doesn't extend, I very much think that those numbers could really be under pressure, and we could see a lot of repossessions in. And that's, I suppose, mostly going to be built around the jobs market and how those numbers are looking, because unfortunately, if the job numbers aren't good, unemployment goes up, eventually payments will not be remade, and unfortunately that will be defaults and repossessions, and that's where it will take us.
Yeah, and just on the back of that additional rental stock that's due to hit the market, there are sort of reported mounting rent arrears in that sector, largely on, if we sort of refer to residential property. Are we likely to see a raft of evictions in the sort of our Q3, Q4 2020?
I think the rental market, as some of the data is showing, and actually we can touch on that. Rental in both outer London, prime London and prime central London has seen declines across the board, and that's a pure reflection of oversupply and a lesser appetite. At the same time with sales, and this is really interesting, in relation to the sales numbers, flipping back to what we were talking about, what we're seeing in outer London on the fringe of prime fringe, that you could arguably call secondary or greater, that's seen a small decline, half a point, whereas prime London and prime central London has seen an increase of between 1% and 2%. Now, all those numbers are quite nominal. So, you know, when you blend, it means the market's flat, and the market being flat is actually a positive, and it shows a robustness and sustainability. We're not seeing that in the rental market. We're seeing rental prices coming down. We're seeing loads of stock on the market. So oversupply, putting pressure on pricing. And I think it will lead, to answer your question, it will lead to evictions and repossessions unless something dramatically changes.
It's a sort of wait and see topic. I mean, with on the sort of rental market here in London, do you think as a result of these rental evictions, which possibly might heighten, do you think that'll impact the market? Could we see any adaptations, possibly larger deposits, more sort of background or vetting checks on tenants, or sort of larger portions of rent paid up front?
I think that's a really good point. I think there will be changes. I think with product pricing, there's going to be changes with the buy-to-let product, because if rental pricing is coming in, it's going to need to be a larger coverage. Maybe the deposits will have to go up for that. So I've switched from lender, stroke purchaser or investor instead of applicant. So I think there's going to be changes there. Void periods we could see growing. And so I think there's going to be a lot of pressure on the mainstream buy-to-let market from an investor perspective. And from a tenant perspective, you'll be getting better pricing, but maybe the tenant checks, the deposits required, will have a lot of pressure on them. And I think we could see some changes over time if we see negative activity. I think that's something we've really got to keep our eye on.
Yeah, I mean, the government, there's been calls for sort of changes in the way that tenancies are governed and more security of tenure to the tenants. However, with the sort of pandemic and the influences on landlords, do you think this could flip the other way with sort of more break clauses and more flexibility to the landlords? Could it actually, what the market's been trying to achieve, be flipped on its head?
Yeah, I think there could be changes either way, because on one side you want to be protecting tenants' rights and their opportunity to remain in situ. At the same time, investor products require that income stream, and without that income stream, those investments become a negative investments, and there are repercussions for that. So I actually think it can go either way. Everyone keep your questions coming in, right-hand side, type in your question and we will give you the answer. What else have you got, James?
Well, I was just going to sort of, just as sort of a talking point to cap that off, I was going to say the UK buy-to-let market is still here largely dominated by small and individual landlords. And it's just going to be an interesting point of wait and see on how those small independent landlords are going to react and adapt to any sort of non-payment of rent, which is inevitable, which we're going to see in the coming months.
Yeah.
But sort of moving on, sort of to ease the property market back into some sort of normality, do we envisage any further sort of parachute schemes which would be longer lasting, that could hopefully have a smoothing effect on the market, so there's not sort of a fall off and we get that sort of steady growth rather than any sort of fluctuations in pricing?
I think that the government and any kind of stimulus is going to be extremely flexible and is going to really follow the market trends and the current economic position in terms of both GDP, transactional volume, and the employment situation. So I think it's highly likely where if they feel the need to enter and add more stimulus, it will. And if they feel the need that the stimulus or the incentives that are currently there are sufficient, then it will remain as it is. But at the moment, we just don't know what the landscape is going to look like when furlough finishes. We don't know what the market is going to look like when the current stamp duty window is supposed to expire. And I think the government is going to have to be tremendously flexible around that stimuli to ensure the smoothness of the market At the same time, we have the potential of a second wave putting pressure, especially in mainland Europe at the moment, putting a lot of pressure on the market. Historically, we've seen this year that the UK does follow mainland Europe trends, which means that we are 3, 4, 5 weeks behind the curve. That would endanger everything that we're talking about now in terms of relative positivity in relation to the sales market and uncertain times for the rental market. What other questions you got, James?
Well, I was going to go back to sort of the transactions in the property market, with sort of data still lagging, obviously, behind today's date, with sort of land registry and other databases having a slight lag. I was going to say, have you got any more information regarding sort of purchaser profiles on sort of, let's start at the sort of entry level of the market, the sort of 250k to 750k market here in London? So what purchaser profiles are we seeing? We're seeing sort of obviously a lack of overseas investment in those sort of new builds. We're seeing sort of first time buyers. What's the main purchaser profile there?
I mean, within that space, it's predominantly UK first time buyer, UK investor, with overseas investors predominantly for the new build stock, especially in London when you get to the upper parts of that range. I think that as you start going up the scale, it then becomes more of a overseas investor. When you start going prime, super prime, it's predominantly overseas investor. And I think that trend is not going to change. We would expect more overseas investors as barriers to coming into the country get dropped. If they don't, caveat, and there's a high possibility that they won't, because at the moment more countries are having restrictions put back on them, then that could have an impact on the recovery in the 1 to 2 million, 2 to 5 million, 5 to 10, if the people can't get into the country. And we've talked about that before. What I would say, and it's something I mentioned last week, we, from a valuation perspective, are extremely busy. Agents are really busy, both with bringing on new stock and putting deals through, and the conveyancers are tremendously busy. That triangle, that tells you exactly where the market is. If we are seeing in our market, along with the agents and the legals and the conveyancers, a lot of transactions going through, especially for acquisitions, that's a live indicator that the market, relatively speaking to where we are at the moment in the world and the pandemic, is buoyant and activity levels are very good. And we're in the peak of the summer months. So we're in the peak, the middle of August, with a lot of people being away. And if there's activity and volume in August, if schools return in September and we have some kind of normality because second wave in the UK doesn't get to the levels previously seen or following a France/Spain trend, then it will be a real moment to see, does this market have legs? September is going to be the real month to see whether actually there's sustainability here, there's legs, because October kicks in, furlough finishes, and suddenly there's going to be a really lot of economic pressure facing us. Last 5 minutes, everyone, if you want to get your questions, right-hand side, type in your questions, and we will respond. James.
Yeah, I was just going to add to that and say that the sort of prime, super prime ends of the market, of which we've brought you sort of off-market super prime transactions, is still performing very strongly, and it's not possibly as reliant as some speculators have reported on the overseas investment markets. And just wanted to sort of bring that in as a topic of discussion with you.
Yeah, I think that's an interesting one. Like, what are your thoughts?
Well, I think in some of the super prime deals, we've had sort of Regent's Park mansions sold for over 100 million. Started this year in January 2020. I know this was an overseas Chinese buyer, but the highest sort of single property acquisition for 205 million, just south of Hyde Park in Knightsbridge, sold at the start of the year. So whilst there is those sort of overseas high net worths, there's obviously underlying demand from domestic buyers at that end of the market.
Yeah. I just think that having followed London for so long, safe haven, unrest across the world, uncertainty, even Hong Kong is a big market for London and the UK, especially in prime, super prime. So I think there are various things happening in the world at the moment that actually play into London and London prime from an investment perspective and as a safe haven and with a currency play. It definitely attracts the foreign buyer, and I don't think there's anything I'm seeing out there that would change that moving forward. A quick question that's come in, James. Do you think now is the right time to buy a buy-to-let residential investment, or would you wait and see what happens with the market, or see what happens with the stamp duty holiday? What are your thoughts on that?
Yeah. So in terms of the buy-to-let market, obviously at the moment, I think it's very area dependent, and you've got to look at what is the tenant demand going to be in that area. Is it an HMO? Is it student-let? Or is it a family market? Is it a young professional? So I think you've got to look at that first and foremost and just see, is the tenant demand definitely going to be there? What are your voids going to be? Another thing to look at, what's the stock availability? Is there sort of a property that really fits the bill of what you're looking for, your investment product at the moment? What's the sort of, has that market moved at all this year? Has it fluctuated up and down 2-3%? How does that compare against your stamp duty savings? So it's very sort of sub-market dependent, but those are some of the indicators which I would be looking at if I was sort of in the market for one of those investment products or buy-to-let product.
Yeah, I mean, I always think that timing is important when you're entering into a marketplace, especially from an investment perspective. So I think it's very specific to the opportunity you're looking at, the marketplace you're looking at, et cetera, et cetera. So I think if you understand that an opportunity presents a good one, you're taking a long-term view, and the yield is good and the income stream is good, that kind of like allows you to make a investment decision on a buy-to-let product more than the short-term scenario, what's happening within the market. Before we get to the last question, James, just want to share with everyone what's going to be happening in September. We will have some special banking guests, so that's going to be something to really look forward to. We're going to have some lenders. At the same time, we're going to get our friends from NunRes. They're going to come back in, so we're going to do another data sales special with NunRes. So that's going to be really exciting. So really looking forward to that. If you can't come to the show live, not a problem. We're on all the platforms, #askrobco, and all of you get sent the YouTube link so you can listen or watch over the weekends, in the evenings, when you wake up in the morning, when you're doing your run. All of them are there for you. If you don't get your question answered, if you want a special topic, then we're going to look to do a home special in September, Greater London home county special. We're going to try and capture those trends and really look into that. And then quite a few of the lenders have approached us for that. We're also looking to go into detail in some of the specialist areas, especially topical areas at the moment, such as cladding, ESW1 forms, PI, insurance, and some of the real topical subjects. I think quite a few of the lenders have approached us for that. So we're going to bring in some special guests in September and cover all of those subjects to make sure that we're providing you with added value, great content, and live information to keep you up to date with the property market on a weekly basis in the uncertain times that we're in at the moment. Last question from James from today before we close out.
I just wanted to cap off by just underlining the sort of importance of some of the anecdotal indicators which we've been bringing. As official statistics, there's always a lag. I mean, for instance, last week we were sort of reacting to some of the ONS statistics regarding the UK economy. And I mean, just to like those statistics are actually from, you know, March, April, June, and within that period, we were actually commentating on the sort of market activity and some of the positivity during that period.
Absolutely. I mean, I couldn't sum it up better myself. We are giving you live intel, live data, live information on what we're seeing on the ground on a daily basis in your space, in your marketplace. The majority of information that you're reading in the news is collected data, especially quarterly reporting that lags the marketplace. And yes, it was a true reflection of what happened in that period, but it wouldn't be a true reflection of what's happening today. That's what we're here to do, to provide you with every week, 1 p.m., #AskRobCo. Thank you everyone for joining. Thank you for your questions. I know loads of you are on holiday. I am completely aware of that. I look forward to having you back when you do get back from your holidays. And I'm hoping that you're enjoying the listening if you are sitting on a beach somewhere and listening to the show. Take care, everyone. Thank you to James and Dan for the production and for the questions. And we'll see you all the same time, same place next week. Have a safe week, and thank you for joining. I really appreciate it. And everyone, look after yourself and take care. Thanks, Jane.
Thanks very much, everyone.